Welcome to the Supporters Fund Ask an Angel. I'm your host, Jeffrey Poffin, and today we'd like to welcome to our show, Mike. I'm going to say it wrong or I'm going to say it right. Omarez?
Not even close.
Man.
But that was good though. I never heard that one before.
Well, I was going with the Spanish touch.
I got that. Growing up in Arizona, I was Jarmuz quite a bit, but it is Jarmuz. My friends call me Muzz.
Muzz, I love it. And Jarmuz is obviously a great name too. So it sounds like you could have a Spanish discotheque band behind this. So, and I'm sure there's something in there, and then we're going to dive into that. But again, Mike, thank you very much for joining us today. I'm going to say that of all of the investors I've talked to in my lifetime, you're the one that I've had the most excitement to dive into because you've done a crazy amount of investing and done a lot of great things. So I'm excited to explore this today. So maybe the best way for us to start is we'd like to learn a little bit more about yourself. So maybe you can share a little bit about your background, kind of where you're sitting today, what you're looking at doing in the future, and then one thing about you that nobody would know.
Sure. So I'm from Arizona, and I grew up in just a regular middle-class family. I was in the music business for a long time. That was my primary focus. I had a record label in high school. We ran a really cool punk rock venue. We did 35 concerts a month in Phoenix, Tucson, and Albuquerque. We grew that to be a rather large business. I started managing a band. They were called The Format. We got a big major label deal with Elektra when we were in our early 20s, and toured with them for many years. I toured with some other bands as well. And when that came to a close, I did some soul searching. I went to Mississippi. I lived on a plantation farm at this mystical place called the Crossroads. It's a famous place, home of the blues here in the US. And shortly after that, moved to New York City, where I started all over again, not working in music. And pretty much, I drove a taxi and I got, made a life for myself there in New York, basically starting over, got into real estate, got very lucky with a healthcare tech company. I was the first employee and watched this one single owner build that company from zero to selling it for $450 million to Blue Cross Blue Shield of Michigan. And then I was an early employee with him again at his next company. He said I was his rabbit's foot, I guess, because clearly I don't have the MBA or PhD or clinical knowledge, but supported him, and he just sold that again. So now I'm unemployed and officially focused on angel investing full time. I started in 2015 on the secondary markets, just participating, didn't want to lose all my money, wasn't quite as cavalier and skillful as yourself. To make those decisions. It was very important to me to not lose all my money, and then just put a lot in my own personal education, and eventually started investing in early stage companies. And now that's really what I'm focused on. And I think one thing that most people don't know about me that I'm just now starting to embrace is that I did not finish high school. I have an 11th grade education.
Well, you're crushing it for 11th grade education. So amazing and awesome story. And I know we've chatted a few times about all the other great things you've done, but man, phenomenal story. So let's go back to a little bit about when you were working with the first startup. Can you share a little bit about what that looked like from kind of where it's taken you to today? So, people don't just jump into investing and decide, hey, I'm going to be an investor. You work through, you learn the elements of what it took to be in a startup. Maybe share a little bit about what that experience was like and kind of how much that played into where you are today.
I think one really cool thing to think about in life is with one phone call, your entire life can change. And you often forget that and you get kind of stuck in this. And I was in real estate. I was renting apartments in New York City, trying to sell apartments. And I got this call from this guy one day, and he said, meet me at the Four Seasons Saturday morning. He called me on a ridiculous apartment. I thought it was one of my friends messing with me. It was like $40,000 a month, some insane apartment. Nobody ever called me on it. And I met him and I showed him a bunch of apartments. He didn't rent any of them, and he offered me a job. he said, come work with me. Your life is going to change. And it was him and his wife, and they were just laughing. He doesn't even know how much his life is going to change, you know? And I did. I worked for him. I was the first employee. He gave me some equity. And just watching, you know, we didn't even have an office. You know, it was two guys in a car. You know, I was driving him around to these meetings, and I kind of thought to myself that I gave up. I was just starting to do well in real estate. And I'm like, you know, thinking, what the heck am I doing with this guy? And sure enough, next thing you know, he's got 200 employees, and just the decisions that you come across, when to raise money, when to not raise money. Let's take an attractive line of credit from Goldman Sachs. It's non-dilutive, you know, and let's distribute it. Just all these kind of high level decisions that I was on the inside circle to the guy. And it was really cool watching him do that.
You got to really learn what it took to be a startup, because one, being the first employee of a business, as you mentioned, you were able to work in the equity side, which makes sense. You're the first employee, but you were actually on the front line. So you got to see how everything was unfolding and be part of those conversations and be part of what was going to be that next big thing. And interestingly enough, you took the risk, which in investing world, risk is number one. This is what we do. We risk everything. And you risked a job that you said you were doing well at to get into this business and learn the ropes. So now you're in this and you're learning from these two individuals. How did you find that went? Were you at some points thinking, these guys sold me on this? This is a bag of beans. This isn't what I look for. I was looking for the good stuff. Was there anything like that ever crossed your mind?
Yeah, I mean, the job that I was, you know, hired for was really kind of like a Joe Friday, whatever I need, you're that, you know, and I have a marketing background. So when that opportunity presented itself to build out the clinics and really, market it, I was really good in that role. But until then, you know, I'm driving these guys around all day to meetings and, you know, getting sandwiches. And, you know, he moved from Las Vegas to New York, and I'm coordinating, dealing with movers. I'm doing all these things that weren't really, you know, I'm not too good for anything. So I'm happy to support the team and what was needed at the time. But yeah, I was totally thinking, you know, what am I doing? It's in danger, you know, indentured servitude for these people. But they ended up totally taking really good care of me.
That's amazing. So now you're kind of in this position. You're at 200 people. Is your role changed? Do you start to define your role? Are you doing more on the investor side? Are you learning more of those things and saying, you know what, I got to drive this line of business? Or were you still focused on marketing? How did that all work?
Well, late 2012, kind of when they were in the hyper growth period, that's when I really discovered Bitcoin. That's when I really kind of, you know, and once you go down that rabbit hole, I mean, it just kicks your head open. So I really went full on, and I pretty much tried to quit. I just told them, listen, I'm gonna do something with this. I don't know what it is, but I'm going to do that. And they did not want to lose me. So they said, well, what can we do to make you happy? And it was, you know, I don't want to do this anymore, you know. And they said, all right, well, we'll make you the marketing director. We'll make that a real title for you, and you can do that. So I ended up, you know, Bitcoin was secondary. It was a hobby. But that's kind of how it happened. I basically had to try to quit.
Nice. So then you dive into this Bitcoin space, which I know became that hobby that kind of continued all the way on until today. What was the thing that interested you the most about it, and that you were early? There's not too many people that were really into Bitcoin back in 2012, outside of maybe scammers, drug dealers, and everybody else that was finding a way to move money.
So a lot of the people from that point in time that discovered Bitcoin then, even probably still today, you're all gold and silver people. I mean, you're all the gold and silver crowd, the sound money, you know, listening to all of those podcasts and those type of people that are preaching and the anti-Federal Reserve and hyperinflation and all of this stuff. So that it was really familiar. It was an easy transition getting into Bitcoin, because I came from that. And that was pretty much what it was, just better money. It just only makes logical sense to that Bitcoin was going to be much more useful in the future than gold. So it wasn't too much of a stretch, like putting those two together. And then I just pretty much kind of started to play with it like you're a hobbyist. That's the best way to get into Bitcoin, right? So you learn how to make a paper wallet, which many people now don't do anymore. And I owned a small bar in New York City called Old Man Hustle. And I met this guy. We accepted Bitcoin and we got a little bit of press for that. And we had the second Bitcoin ATM in New York City. This guy brought basically a homemade box and stuck it in the back. And that was a really cool thing. It was the second one that was in New York.
Oh, that's amazing. So now you've got the Bitcoin machine, you're transacting, you're doing lots of great things. Then you go back into this next company. What drove you back into that?
So that's kind of like, and this is a good question for you, because when you invest in entrepreneurs that are successful multiple times, when it's clear that somebody's a winner, it's more likely that they're going to be a winner again. At least that's what I found. So the guy that I had hitched my wagon to his star, so to speak, was a winner. So how could I not sign on again for this next venture? And that's just pretty much, it was an easy decision. And these are not like, running the business kind of people. These are, everyone runs Mach 5 and within 6 years we sell it. So it's not kind of like a career long-term choice.
Very cool. And now you jump into this next opportunity. How much was it? How big and different was it from the first opportunity? Were you still focused on the marketing side? Were you doing more things now because you've expanded? You got a bar, you're in Bitcoin. Are you now exploring different avenues working with this this new venture?
No, it was in healthcare technology, in documentation improvement. By the way, the entire healthcare system is just absolutely horrific. That's a whole nother thing. But I didn't have a high level position at this company, but it was much better that way, because you can just kind of do your own thing and support them with whatever they need, and you don't have to be. It wasn't as demanding. So that's when I was really kind of starting with the angel investing, which takes time. I mean, if you get in 300 syndicates, and start following people like yourself and start reading every day and consuming and processing as much as you can, it's easy to kind of put your job in the back burner a bit when there's so many different opportunities being presented at you all day.
No, I agree with that. And so that kind of moves you into that new stage now. So that company, did it exit as well?
Yeah, I did.
Very cool. Well, congratulations on being part of 2 exits and working your way through that and learning as much as you possibly could. So that's awesome.
Well, now I'm unemployed, so I got to figure out what to do now.
I'm going to guess you're probably doing okay, so I won't worry too much about being unemployed. You'll find something, I'm sure, like tomorrow, like that. So you're a pretty clever guy. So now taking a look back, you start working, you start investing. So how much of that early stage experience you've gotten really helped you propel into this investment world? And what got you started? Who told you about, hey, come and invest in these syndicates or invest in these startup companies? What got you involved in that?
So I think maybe still to this day, but definitely at that time, I think still, I am the most active investor on EquityZen, which is, in my opinion, the best place to get started. If you're an accredited investor and you want to participate in some late stage secondaries, that is the place. And I was just in so many deals. And luckily, you start in that 2015 area, all of those IPOs are hitting now and have been hitting for the past 2 years. It's been really good in that respect. So I went to this financial conference. I met this guy from Long Island, and I was telling him what I was doing. And I said, look at some of these returns. Your money's only tied up for maybe 18 to 24 months. Maybe it's a 4x or a 6x. Maybe you get a 3x. But look at how great this is. And he says, yeah, that's great. But he's like, but let me show you something. He's like, why don't you take a look at this? And then all of a sudden, you start looking at these early stage things. And I said, well, I don't want to lose all my money. I've always been too scared to invest in the early stage stuff, because doesn't 80% of it go to zero? Doesn't 90% of it go to zero? And then you start learning, well, what's the power law? What's the power law of investing? Because coming from a music business background, that's the only industry, entertainment is the only industry where you can have a 90% failure rate and still be wildly successful. Like, that's your entire business. The one pop star pays for everything else that's done on that label. The one good TV show, the one movie. So, making that connection with angel and early stage investing, it started to loosen me up a little bit to you're not going to lose all your money, and if you do, it's fine because it's a numbers game.
It really is. And you kind of hit the nail on the head there with the power rule and the 1 in 10 success. But that 1 in 10 that is successful, like you said, it offsets all the losses of the other 10. And of course, everybody's goal is they want 2 or maybe 3 successes in those 10, and they'll do whatever it takes to kind of get there. So now you're kind of going through all this learning. You've got startup experience, you're investing all over the board. Today, you've got, I think it's close to 1,200 or more investments. Is that correct?
Yeah, over 1,200 companies.
Brilliant. I'm hitting the green red button right now. Just alert. Amazing. This is pretty cool.
Well, the thing about that is it sounds like a lot, and it is a lot. But, when you have an amount as low as $1,000 and maybe as high as $100,000, right, for maybe the founder that I worked for, or some really exclusive opportunity for his company that I'm not with right now. You know what I mean? But for the most part, there's small amounts. The secondaries is always 10 or 20,000. You don't really get away from that. So, but what do you get for that $1,000? You get the best education ever about a company and about their life. And when you try to read everything, what's working, what's not working, what are the KPIs that they care about? What are the pain points? Maybe you tune into a founder's Zoom call, you listen at your leisure. Just learning so much from all of that. You become this like living, breathing API for all sorts of shit, and I just really love the education. It's not just about making a ton of money. It's not just about getting those multiples. Like, there's so much that you learn, and you learn it firsthand. You learn it from dilution by experiencing it. You learn it from conversions or an exit scam, or 4 months ago, this is the hottest deal ever. And they were in this accelerator and everyone's in, and this is the greatest deal and the greatest deal. And you invest, and 5 minutes later, COVID has been horrible in India. We're winding down operations. We're able to return 30% of everyone's investment. Thank God that was a small investment. But look at the education, look what you learned from it, The same way when it's, hey, this is the hottest deal ever. Everyone in the world is in it, from Naval personally to, every top tier fund, the damn thing reads like a Hollywood script for who's in the deal. And you invest, and all of a sudden, 4 months later, the damn thing is 30, 40x what you invested in. That's another one for the file manager. You know what I mean? Why did I only invest such a small amount, So, but to do that enough times, if you were, I hate to use a gambling analogy, but if you were going to learn how to play blackjack in a casino, you wouldn't go to the $500 hand table. I mean, you just wouldn't. You would see a lot of hands at the dollar table with your buddies before you decided to do something else. And I had a guy, CPA, who was asking me what I was doing. And I said, I'm angel investing. He says, oh, I hate that. I said, why? He said, well, I made 2 large investments and they both went to zero. And that's the problem. That's the problem is people come in, they write a big $50,000 check and then it doesn't work out, Invest $2,000 into 25 deals, follow the companies, learn as much as you can, hit the pro rata hard. When the winners emerge, that's when you really get in. You can always invest more later. The amounts can always go up. And I wish people had that kind of bit of wisdom before they got started.
And that's brilliant. I love the analogies, and there's nothing wrong with it using the analogy of gambling, because really at the end of the day, what you're doing is you're playing the laws of averages. You're figuring out, how can I get as much information into my brain as possible around this circumstance, build patterns so that I can learn and understand how these things are all going to operate and work. And then I can execute on the ones that are going to be successful. I can double down, quadruple down, whatever I need to, but I'm going to set it up now so that I can have a footprint and grow. And really, that's what investing through a fund or investing indirectly into a company is all about. You'll come in, test the water, put in that $2,000 or 10 grand or 20 grand, whatever you're comfortable with. And you put that in, and then you watch and you learn, you participate, and you start to see, is there a lie here? Is this real? Is this fake? And then when you get going further ahead, you start seeing who's coming in. And like you said, that laundry list of big leaders jumping in on top of that business. Well, now I can double down, triple down, and make sure that I'm making a footprint. And the ones that you see that are taking a tough time or having a rougher go on investing, well, maybe you don't go back in, or you put in a smaller position because maybe they haven't figured out how that MVP is going to hit the market. So a lot of learnings by just trial and error. And I love the way you're trialing and erroring, because you're doing it with small increments, but you're taking down so many industries and so many areas that it's like anything. I think someone told me that if you go out and talk to 50 women, one of them will talk to you back and go on a date. So the odds are 1 in 50. So you've got the same 1 in 10 odds that if I invest in 50 companies, I've got 55 that will be a home run. So I need to double down on those ones. And that comes from experience. And the only way to gain experience is taking the time to make sure you make a lot of investments. Different approach than putting all your eggs into smaller baskets. But I love how you've tackled that.
So if investing and this journey that we're all on, because you started somewhere, you remember when you probably were in the public markets first, and then you kind of got exposed to this world, you level up your experience, right? So I leveled up to the angel world and the early stage world. And at some point in time, I hope to be able to level up to what you're doing. You're hosting pitch events, you're getting people together. You can sit face to face with a founder and be one of the first checks in and not really rely on the signaling, because even for $1,000 or $2,000, even for a small nominal amount, the signaling still has to line up. I mean, you're still following top tier investors. I love crowdfunding. I love what crowdfunding is doing in general. But, if there's 85 companies live on Republic right now, I could really only recommend maybe 2 or 3 of them. And those are because I've read deal memos on those companies from other places that weren't crowdfunding. So you can send those to a few friends and be like, hey, you should check this company out. I know this is legit. Look at the signaling. They're XYC, they're whatever, But then you get somebody hooked on crowdfunding and they're just on WeFunder, just putting money into all these things. That to me is a disaster, So I think you really have to pay attention to the signaling. And then you get to a point like you're in where you don't have to look at the signaling. You know what data you need from that company before you make an investment. Send me this, and this on this dashboard. And that's how you pull the trigger. And I hope to be able to do that one day.
Well, I don't see it being too far. Maybe tomorrow will be a good start, but you really have summarized a lot of great points. And I think what really stands out in what you were sharing is that if you take a professional sports player, because we're all familiar with basketball, so we'll utilize this as the analogy here, is that you take LeBron James. LeBron James isn't playing 4 other sports. He isn't testing the waters on how to become a professional swimmer. He literally went into one sport and dominated it. And he didn't dominate it from day one. He went in, practiced, he learned, he had leaders that he looked up to, and he started to learn from what they were doing. He learned their mistakes. He learned how they interacted with coaches. He learned how he interacted with players. And he built himself a brand, and he built himself a position that he could get and be reliable to everybody else around him. So then people started to lean on him to keep being that person. And eventually he grew, he hit stature, he hit size, he hit brand. And now all of a sudden every team wants him. So he's not looking for the signals anymore. He is the signal. So is he having an up day? He's having a down day, but he's got 15 years of background, learning, and experience that has driven him to get to that point. It's the same thing with investing in early stage companies. You have to take the time, put everything into it to be the best. Your goal is that I want to be the best, and you can't be the best by being in there part-time. You want to make sure that how you build your brand and how you build you is all about focus. It's about trial and error, losses. We all have them, but we have to talk about them. We have to share about them. And then eventually people start to lean into you and look for those signals. And that's when, I guess, in a way you can say I've made it, because you become the focal point of being the best in that industry. And you can be the best in investing. You can be the best in sports. You can be the best in anything you choose. It's just put the time in to learn and make your mistakes so that you can keep growing. And you're obviously doing all of those right things, no matter how many different angles you cut it. 1,200 investments. I don't know anybody that's done more than like maybe 300 or 400 in my personal world. And that's again on the top tier. So you've already stepped way above all of that by experiencing that level of volume, but you're also taking in a huge level amount of data and inputs, which means that that next company that you see, instantly you can tell in 30 seconds, now they're not doing the right things or they're on the wrong angle because you've got so many data inputs coming from every other area.
See, it's interesting because you're investing out of a fund, and now I'm investing out of a very small little boutique fund project. But that's when you really have to be careful, right? I mean, I had pre-IPO shares of Lyft and Uber. On the secondaries, not big investments, right? I mean, that wouldn't be a conflict. At least I don't view it as a conflict. There's room for both. And I hope that that's an accepted standard that comes to be with early stagers, especially people who are really active like myself. You have to exercise discretion. You have to be very confidential with everything. But I don't think, just because I invested in this rowing technology startup company, I can't invest in this other rowing technology company in another part of the world, or they have a slightly different business model. I don't think it's winner take all. And I think a lot of people really get fixated on, well, I've already invested in this vegan tennis shoe company. I can't invest in this vegan sock company, and I don't think that's necessarily the case, especially when you have these smaller investments. We call it piking as a joke. We're all pikers. But when you're making these small investments, I don't think you have to really be too careful about that, as long as you're not, causing harm to either company. And I'm just waiting. I don't know if that's going to be acceptable. I don't know if somebody's going to eventually take a look at what I've done and be like, you can't freaking do that. I don't know.
Hey, just remember, you're an entrepreneur and you can do anything until you get slapped. And in this case, I think that you're pushing the line and I love it. I do the same. I look at, if I'm going to invest in a company here, I want to make sure that the next company I invest in is going to benefit the first company and the third company and the second and the fourth, because they all intertwine somehow and they're all going to grow each other, buy each other, whatever that looks like. So we're in prop tech. We're buying one that's managing the prop tech. We're in one that's managing the assets. And then we're in one that's selling the assets. And why is that? Because they all have to leverage off the same industry, same contacts, build a bigger business. So at the end of the day, I think there's always ways to leverage that. But at the same time, it's also being transparent enough so that your investors and the way that they're operating, they're also understanding the point of view that you're taking and utilizing what we do on our fund side. We look at, where is this company going to scale to? Where are they going to be in the next 5 to 7 years? Will the industry still love them? Will they still be a buyer out there for them? Or are they just going to be a trend and then they're going to dissipate in the next few years? So we have to look at a lot of different signals on that side of it, but it's day one. They're really early companies. So can we make a small investment in personally, help them grow, and then come in from the fund side and help them double down or quadruple down? And I think all of those things, you can change the plan. It's just a matter of timing and how you view your investments.
There's a lot of benefits also when somebody gets me on the team, and when you have that insane data set, which is somebody wants to penetrate the employee rewards market. Alice did a good job. Bob gives her 20 stars. She cashes them out for a gift card, whatever. Somebody really wants to get into this space, right? Well, I consult my data, and I'm already in 7 of those companies, maybe. You know what I mean? And I have warm intros, and I'm able to provide them to this new company who wants to get in that space. So there's a lot of value that can be added by the sheer volume. And I think that kind of offsets any potential, why do we want this guy in the deal kind of thing.
I think you're doing a great job, man. I think you would be a home run to have on any team because of the amount of data and understanding you have, the things you've gone through. And you know what? I'm going to ask this question, which is going to be related to, I'm looking for a success story, something that just blew your mind that you couldn't believe happened. And you don't even have to have met the entrepreneur, but just the fact that this person had to go through X, Y, and Z to get where they were. Is there any story that just pops in your mind that just kind of blew your mind on what it takes to be an entrepreneur?
An entrepreneur or a personal success story?
Either one works.
As far as a personal success story, I'm a really big fan of Cyan Bannister, and basically she's was a homeless person from Tucson, Arizona, and she grew to be a partner at Founders Fund and discovered technology along the way and caught a few breaks. And it's unbelievable what she overcame in her life. So I'm a big fan. It's a personal motivator for me. And as far as entrepreneurs go, I can't like really cite one, but oftentimes you come across, they had 4 failed startups, and that is ripe for whatever they're talking to you about. So I just think there's a lot in there, from the first time founder, which is all fun. They're all different hands, right? They're all different hands that you're dealt. And somebody who has failed 3 or 4 times shouldn't be taken lightly when they're pitching their new idea to you. That's just something that I think. I know I don't really have a very good example for you, but
no, that's brilliant and well shared. Well, I love that, because in my mind, what it resonates with is one of our portfolio companies called Scout. Adam, he went through that. He built 3 companies. I'm pretty sure it was 3. And he would say, you know what? I had to fail one, didn't work out very well. Things didn't go well. But you know what I did this time? And this is what he had told me when we fell in love with his brand and his business. He said, I took the time to focus on the environment. It's outside of tech. Tech is my space, and now I'm in CPG, but I learned, and I took everything I learned, and I took my time on this one, and I have staged it out perfectly. And I will tell you that in the 1.5 or 2 years that we've been working with him, he has staged out everything along the way just perfectly. I'm going to race here. I'm going to do this. I'm going to do that. So he took all of that learning to get himself into a better position. So you know what, that 4 fails is amazing, because I think that really drives that person home to saying, this next one is going to be the one. I am going to make this one work, because if you're going to try that many times, that means you're dedicated and you know how to hustle, and you're going to do whatever it takes. And you also know when to quit, because you're already on to the next thing. So I think that's a valuable share, man. I think that's a great story.
And also, one other thing that happened with a company that unwound for me, and I didn't even know that this could happen as part of the education. I invested in a company, and then 5 months later got the email that they're ceasing operations with an apology from the founder. But we were able to get back all of our money. That founder had it, and he returned all of the syndicate's money and made them whole. And I don't know how that worked. I don't know if he had it, or what his balance sheet was like, or why we got all of it. I mean, I don't know how could everyone get all of their money back. It couldn't have happened, but he did that, right? So, and he wants everyone to know that, he tried to do the right thing, and he's going to have a new project, and this is how he chose to deal with it. So that's just another learning case by case thing. I didn't even know that could happen. So how you as a founder deal with those failures, certainly it left a very good, it was in very good light for how we all view him, because he admitted his failure, he gave us our money back, and now he's in stealth mode building his next thing. So you just never know where that road can take you. And that very next thing could be a decacorn, who knows?
Agreed. And that's again, that's a true testament to the founder, the entrepreneur, on how they view their business, how they view the interaction. They're making sure that they're planting this going forward, that they're going to set it up for the next one to be a little bit more successful, or hopefully a lot more, but they're taking care of what they first started with. And there's a lot of founders that just kind of fluff off all that money they raised, or don't care about how they spent it, or not focused on growing the business. And it's a shame that when people get money, they don't look at it as, I should protect this, and I should protect the investor and protect the business and grow it. But at the same time, we can't make everybody whole and make everybody perfect. But I do appreciate those types of founders, because they're the ones you want to keep investing in every time they build a company.
Absolutely.
So now we're going to kind of jump right into, and man, this has been great. I love all of this journey that you've been on. How much of, I guess, last question before we jump into the rapid fire questions, how much of running and operating a band and touring and 35 shows a month, that's insane. That's like you're doing, some days you might have been doing 2 or 3 shows in a day. That's incredible. How much of that hustle do you see that's kind of baked into your wanting to learn and be part of this whole startup environment?
Tons. Tons. It's the same thing. All right. So my favorite part about booking shows was developing an artist. Okay. So the first time that the XYZ band, you book them, maybe there's 50 people, 40 people. It's in a basement. They got small amounts of money and you maintain that relationship. Okay. And you are working with the agent and the record label and you're following the band and maybe they come through again and maybe there's 250 people there. Okay, so you can look at each one of these things as like series rounds. Okay, I make a lot of connection between the music business and early stage investing. Okay, maybe there's 300 people there, and you maintain that relationship, kind of like maybe pro rata. I don't know. Okay, and then maybe there's another promoter in town who's calling the band, and he's trying to submit an offer, and I get wind of it, and then I'm talking to the band and the manager saying, "Hey, no. You were playing for 50 people. We've done every show in these markets. There's no way I'm losing it, and then maybe they squash it and you just take them as far as you can. And pretty soon they're doing 4,000 people. Okay. And when they get to that point as an independent concert promoter, you have to lose them. Okay. Which I haven't had this experience in investing, but at some point in time, when they come in with those big checks, okay, and those, I didn't even know the letters went that high in the alphabet, you will lose all connection with that company. It's over, right? Yep. And maybe they give you some token appreciation or whatever it is, So when you lose the band after that 4,000, it's hard to keep them after 4,000 or 5,000 people. You just can't do them. They buy the whole tour, and it's a whole different kind of world at that point, So that aspect of it, as far as the developing the strong relationships, really supporting your portfolio companies or your artists moving forward, that's totally applicable to the VC world, I found.
No, that's amazing. And I'm totally following this. I was, I'll call it myself, I was a roadie, one of my buddy's bands. So we were the first fans at his first concert, and there maybe been 10 people there and so forth. We were jamming with them and making sure that we followed this all the way along. And the synergies between what they're doing and raising pre-seed, seed, Series A, all that is just like the crowd. The first crowd was 10 people, put a couple bucks in, and then the next crowd and the next crowd just kept growing. And, eventually at one point we were in Vancouver at a big concert, and there's thousands and tens of thousands of people there. And you're like, man, they finally made it. This is so cool. And what you've got is every video recording of everything that they ever done. But it's just like having a piece of equity in that company, right? So you're right. There's a lot of synergies you can take out of everything that goes on in life, and especially from the band and concert circuit. So that's pretty cool. I love it.
And not only that, when the agent is fielding offers for different shows in different markets, they might get an absurdly higher offer to play at a club that makes no sense. It's not the place for the show, but they're going to overbid and they're going to pay for it, right? And sometimes we tell the agent, take the money. I mean, just do it, do it, whatever. And the show sucks. The promoter loses his shirt. The band's pissed off because the tickets weren't priced right. Maybe it wasn't all ages. Maybe a lot of their core fans couldn't even go, And so that has to be kind of close to making the wrong decisions on who you take money from as a company, right? Mm-hmm. Oh, you know what? It's a high price. It's a ridiculous valuation. And maybe it turns out that nobody really wins there, or they didn't add value, or they wish that they would have went with somebody who really specialized in the seed or Series A that was going to roll up their sleeves and do something, So I'm thinking about maybe writing a little bit about some parallels in the music business with VC, because I am pretty passionate about it, and I do find it to be very similar.
Done. I'll buy the book.
No books, my man. No book.
All right, I'll read the PDF then. But still sounds pretty cool, and I do agree. There's a lot of correlation between that. Well, let's actually, man, we could talk all day. So one last question, I promise. What was the best or most favorable experience you had with a band? Was there, I'm making something up, but it was like the Chili's and you got them to play here. Is there any story that just blew your mind away, like a top band that you got to interact with? I'm a big fan. I love going to concerts. So is there anything that kind of fit in that realm?
Oh my God, we have so many ridiculous stories. I don't even know where to start with this. We have a ton. But one time we got a call at the Nile about doing a Snoop Dogg show. Okay. Now this was way outside of what we would normally do. This is not our thing, but it was on like no notice. It was like 5 days notice, right? And the place held like 1,200 people. And we did it, and we almost instantly sold it out. And he didn't want to show up. He wasn't there. And so the doors opened at 7 o'clock at night. And where is this guy? Right? I mean, this is a real show with William Morris. This is it. Where is the man himself? And I think that crowd waited at least 5 hours. Apparently, he had a little bit too much to drink and left his ADAT, which I don't know if you hip hop people, they sing to a DAT tape. Okay, they put in the DAT, and he lost the freaking ADAT tape at some club a couple of miles away the night before. And everyone's running around trying to go to this Club Pompeii at the time to find Snoop Dogg's freaking ADAT tape so we can get this guy on the stage. And eventually, somewhere at like 12:30 in the morning, he was there with the tape, and he played the show. And no one got refunds. Everything was good. But I don't know why I thought of that story, but I just
that's awesome.
It popped out.
It still happens. So they went to and they delivered, and Snoop Dogg delivered. I love following him on Instagram. He's always got some entertaining stuff. But that's cool that he delivered. And you know what? That's what you got to do when you're an entrepreneur in a business, is that when something big happens, you got to be there and you got to put it all together. So even if you're late.
Absolutely.
Brilliant. Great story. All right. We're going to jump into the rapid fire questions. We'll start with the business ones. Then we'll jump into the personal.
You got it.
All right. Pick one or the other. First one. From an investment standpoint, are you interested in a solo founder or co-founder?
Co-founder.
Unicorn or 4-year 10x exit?
4-year 10x exit.
Love it. Tech or CPG?
Tech.
Brand or tech?
Shit, man. These are hard. Tech.
AI or blockchain?
AI. There's no purpose for blockchain other than Bitcoin. It's all pointless. AI for sure.
I love it. First time founder or second or third time founder?
Second or third.
First money in or Series A?
Series A, just because I'm not there.
Okay. Angel or VC?
In what context?
Would you be more interested to be an angel, or would you be more interested to be a VC?
VC.
Boarded seat or observer?
Observer.
Safe or convertible note?
Hands down convertible note.
Lead or follow?
Follow.
Equity or interest payments?
Equity.
Favorite part of investing?
Seeing every cool thing that's being built in the entire world every day.
Write down your line because I love that, and I totally agree with you on that. Number of companies invested per year?
Hundreds.
Hundreds works. All right. Preferred terms?
Preferred terms. In what way?
Like you want equity, convertible notes.
I'd rather have priced rounds always. And I just, as a tidbit, I will never ever invest in an uncapped note. With or without a discount, there's no chance I would ever invest in an uncapped note. I don't care if it's the best company in the universe. It's an instant no as soon as I know it's an uncapped note. I don't even want to read what the company is about.
Hitting the red green button. I'm on the same boat. I totally agree with that. Vertical of focus.
Vertical of focus.
Yeah, do you focus on any verticals? Or you're pretty agnostic. You're open to kind of any vertical, any space.
Any stage, any space.
I love it. Maybe two things that you look for that stand out in a startup that you'll invest in.
Month over month growth and signaling. I also really pay attention to the burn. The burn always is a big deal. So I mean, everything has to be trending up and to the right. Month over month growth, subscriber growth, weekly growth, you know, whatever metrics are there have to be off the charts. That with the signaling, and I'm in for sure.
I love it. Okay, we're going to jump into the personal questions. Book or movie?
Movie.
Superman or Batman?
Batman.
Pizza Pop or ice cream bar?
Ice cream bar.
5 minutes with Bezos or Oprah?
Bezos.
Arsenal or Manchester United?
Manchester.
What? I'm trying to find Arsenal fans. Bike or rollerblades?
Bike.
Big Mac or Chicken McNuggets?
Big Mac.
Trophy or money?
Fuck, that's a hard one. Money.
Beer or wine?
Beer.
Alarm clock or mobile phone?
Mobile phone. I love the alarm clock. I just don't have one. I don't feel right answering, but.
All right. Hotel or hostel?
Hotel.
King or be rich?
Rich. Nobody wants to be a king.
Concert or amusement park?
Oh, that's a tough one. Amusement park.
And then the last question.
That also depends on the band, but sorry, go ahead. I'll stick with amusement park.
Okay. All right. All right. Has life in the US been boring without Trump? Yes or no?
Yes.
Totally agree with that. All right. Favorite sports team?
Mets.
Favorite movie, and what character would you play in the movie?
Favorite movie. My favorite movie is actually a crazy movie called Waking Life. And man, that's a tough one. I didn't know you were going to ask those type of things. Who would I play in a movie? Shit. You're catching me off guard. I would play Tom Cruise and Jerry Maguire.
Ah, nice. That's good. Yeah. All right. And you said the movie is called Waking Life?
Yeah.
All right. I got to check that out. Favorite book?
Fear and Loathing in Las Vegas.
I love that book. I literally downloaded it not too long ago, like 2 months ago, just to listen to it again. I have the book version of it, but I had to listen to it again. I'm just a huge fan too, so that's awesome. All right, last question. What is your superpower?
A work ethic and determination that is unparalleled to anyone I've ever met. I'm a Taurus. I'm the bull, and once a Taurus runs at something and starts to go, it just cannot be stopped. So when I get obsessed with things, you know, it doesn't even feel like work, like this, like the angel investing stuff, you know, reading books and learning. If it feels like play to you, you will do very well at it because it's not even work. So that that is my definite superpower. And at the same time, the Taurus, the bull, you can't push a Taurus. You can't push that bull to do anything it doesn't want to do. So it goes both ways, but definitely hard work.
Geez, I might think I'm a Taurus. I'm actually an Aquarian, but I feel like I'm a Taurus based off what you just said. But that's brilliant, man. It's a great superpower to have, and being determined and as you say, like getting shit done and moving it forward and being heavily focused in that. It's phenomenal. And when you do kick off your next funding, we're going to have to chat, because I'm interested to obviously dive into that, because I think you're phenomenal in what you're doing. So I'm excited to keep following along with your journey. So either way, Mike, I want to say thank you very much for all of your time today and joining us and sharing your story. Phenomenal. I love your background. I love what you've done and how you've accomplished what you have. You're on my books. You're number one, especially with how you've been investing and the way you've been tackling this space. Absolutely awesome. Don't change. Don't stop. Keep pushing it forward, man. You're doing amazing things. And the way we like to end our show is we like to give you the last word. So if you got anything you want to share to the startup community, to investors, we turn it over to you. But again, thank you so much for joining us today.
First off, when you want to launch your syndicate, okay, and you want to start going that route, I hope that you think of me first, because I'd love to help you get that off the ground. Because I think that you are got everything in place for that. As far as the closing goes, I would say if you're looking to invest, learn as much as possible. Get on every platform that there is and just start reviewing deals. Read the Calcanis book, read Venture Deals. You know what I mean? There's so much educational material on Funders Club. Send Jeffrey or me an email. I mean, we'll give you just too much. You won't even be able to digest it all. So just really get in and get started and learn. Just start somewhere. And the amounts can always go up. Put in the smallest amount ever and then just track the company, follow it, see what works, see what doesn't. Just get involved somewhere, okay? And if you're a founder, know all your options on the table. Know how many different ways. There's never been a better time to get out there and raise money. And you can syndicate it, and you can do roll-up vehicles. You can look at crowdfunding. You can get advice from VCs. There's so many different ways to build your business. Just make sure that you educate yourself on everything that's around in 2021. And the thing that I'm most passionate about that I hope changes is it is an absolute tragedy that any person that is of legal gambling age, regardless of their situation in life, can walk into any casino in Las Vegas and lose all their money. And that is the casino's entire business model. Their business survives on that. It is a rigged game. Okay. But the fact that they limit these unsophisticated investors from investing in technology companies or private companies is an absolute crime. It should be illegal. So I'm personally going to advocate against changing those laws. They've been loosening a little bit over time, but it is absolutely inexcusable why you can't invest in all the companies that you're investing or I'm investing in, because these people might lose all their money, but they can walk into any casino and actually lose their money. So that is something I'm very passionate about, and it absolutely drives me insane.
Mike, I love it, and I wholeheartedly agree with you. I think what you're pushing for is correct. It should be freedom of choice, especially when it's something you worked hard to earn, and you should choose how you want to spend it. And if you can go lose it all in a casino, it would be a better place to lose it in 100 startups than it is to go lose it in one spot on a table. So I love it, and you've got my vote as well. So I'm not sure if you're running for the mayor of New York or what's next, but when you do figure that out, let's stay in touch. But again, thank you very much for all your time, man. You're awesome.
Thanks, Jeffrey. I really appreciate you having me, man, and chatting.
All right, that was fantastic, man. Mike, I just love the way he wanted to learn how he attacked this market, and being able to go in and just say, you know what, I need to learn more about this. Taking the experience he got from running a band, the analogies and everything else that followed in behind that, man, phenomenal. Tied it in really nicely into how the startup world worked. And I think we can all relate to that once we start to understand our past experiences and how we can relate them into getting in and investing in early stage companies. And you can see that just from that and working in the companies that he did, he gained a lot of knowledge. And then in order for him to feel comfortable to dive in and invest, he went all in, just started to invest and figure out what was working, what information he could learn from. And, you know, that's really what it takes to kind of be the best and understand the markets that you're going to jump into. So really enjoyed that conversation and love the Snoop Dogg story. And again, all the things you're doing, Mike, keep it up. Great work. And I want to thank everybody again for tuning in. And again, thanks for joining us today. If you enjoyed the conversation, please subscribe to our YouTube channel or follow us on Spotify, Apple Podcasts, and or Stitcher. And you can also check us out at supportersfund.com, or for startup events, visit opn.ninja. Thanks, everybody, and have a great week.